Next one up here, RVLV. Then we'll get into Netflix, okay? Revolve. This is a sneaky double up for me, right? 137% the stock has now gone up for me in the public count. It's a $26 stock, right? Now, got to understand what's going on with Revolve and where this company's headed, the stock's headed, all that good stuff, okay? Look, even with the tariffs, even with dumpster fire consumer confidence numbers this year, right? Look at the latest quarter Revolve had that they reported a little over a month ago. They still grew revenue on a year-over-year basis, 295 mil from 283 the previous quarter in the same quarter last year. Gross profit went up at a much faster percentage clip. Gross profit went to 161 million versus 144 million the same quarter last year. Net income went to $21 million from $10 million, a double up in net income there, right? And so Revolve's doing a phenomenal job with the financials of this company. Look at the latest quarter. Look at the cash balance. $315 million of cash and cash equivalents. This is ridiculous. Like, think about this for a moment. The total liabilities of the company is 261 mil. So the company has more in cash and cash equivalents than they do in total liabilities. How many other companies do you ever see that? Is extremely rare. HNST Honest might be one of the very few that honestly can come to my mind that they might have. And Honest, I'm not even sure, has more cash than liabilities. I can't quite remember. But Revolve is, I'm telling you, one of very few companies that has more in cash and cash equivalents and total liabilities. Ridiculous. Ridiculous, right? Now, the chat for Revolve in the private group is completely dead. It's honestly might be the most dead chat of all the chats. A lot of times it's just Blair talking to himself. Sorry, Blair, like that chat is just dead, right? It's so funny because there's so many other chats in the private group that there's just so many people talking every single day, right? But Revolve is not one of those stocks. Like no one cares about Revolve. No one talks about it, right? And one of our private group members put this, said, I just checked Revolve's website. Their clothes are too expensive. Most people would not want to shop there, right? This is an issue with Revolve and Revolve stock and how things are understood here, right? Is what my audience is 90% male, right? The stock market investors in general, in terms of people that are picking stocks, heavy male demographic, right? Heavy male demographic. My private stock group, heavy male demographic. I think like 90% of our members, or if not 92 or 93% of our members in the private stock group are males, right? And so if people ever even want to look into Revolve, they go to their website and they see something, right? Keep this in mind. Selling expensive stuff is not a bad business model. Louis Vuitton, LVMH, has a $361 billion market cap on it. Ferrari sells, 12,000 cars a year or something like that? Maybe a little over 12,000 cars. And yet, it's a $68 billion market cap. And it has a larger market cap than companies that spend, or that build 10 times the volume, 50 times the volume, 100 times the volume, right? It's incredible. But what happens is, if somebody's doing some research on Revolve, they go to the website. First off, they're like, this isn't interesting to me, because a bunch of dudes, and they're like, what, dresses, stuff like this isn't interesting. Like, what's going on here, right? So you see the products, then they click on it, and they're like, oh my gosh, $395 for that dress, $995 for that dress, $240 for that dress. What? This is crazy, man. Who's paying that? Then they go to Revolve's other brand called Forward, FWRD, and they look at the prices there, and they're like, oh my gosh, they're selling like Birkin bags and all this stuff. And I'm like, what are these prices, right? And so since a lot of retail investors are males, right, and a lot of people that invest in the stock market are males, they look at somebody like Revolve and I don't get it. Why? Why would they pay all this money for these products? This seems insane, right? Well, I can tell you there's a whole lot of females out there that would have heard that I'm looking to buy an SF90 next year at some point, second half of next year, and be like, that's stupid. Who would pay $400,000 for a car? So what? It gets you to point A to point B. So what? It goes vroom, 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 vroom. Big deal, right? Big deal. Hey, look at that. That's stupid. Why would you spend that much money on that, right? I live in Las Vegas. You know how many guys go stay at the Wynn and Encore and will blow 5, 6, 7 figures at the baccarat tables, the blackjack tables, playing roulette, craps, whatever, on a weekend at the Wynn and Encore? You know how many women would look at that and be like, why? That's so stupid. What are you doing? I don't get it, right? Look at that and be like, that's dumb. Meanwhile, plenty of guys out there like, oh, it sounds like a great time. I want to do that, right? Not everybody is going to understand spending in certain categories, right? So some guy can spend $30,000 on a bottle of wine. $30,000 on a bottle of wine. Somebody that look at that is not a wine drinker and be like, "Are you mad? $30,000 on a bottle of wine? What are you thinking?" Right? I got a couple wine coolers in my house, right? My wine coolers probably average prices in the 30s, 30 something dollars a bottle, right? So we're talking about the bottles in my wine fridge are like 0.1% of the cost of a $30,000 bottle, right? You could have 1,000 $30 bottles for the same price as somebody spending $30,000 on a bottle of wine. So like, why would you do that, right? Why would you do that? I spent over $200 on this bottle of cologne right here. Somebody might look at that. Why would you? That's stupid. Go buy a $20 bottle of cologne, $30, $40 bottle of cologne, right? I really like this one. I really like this one a whole lot. Joe Malone, I like it. What can I say, right? Listen, people are going to spend a lot of money on things you're not always going to agree with, but you got to understand there's a market for it. You might not be the one to go to the Wynn and Encore and blow $250,000 in a weekend. That's fine. There's plenty of people that are willing to do that, right? And they don't need 1,000 people to go do that in a weekend, right? You might never understand why somebody would spend $30,000 on a bottle of wine. That's fine. You might never understand why somebody would spend $400,000 on a car. That's fine. You might never understand why somebody spent $10 million on a house. That's fine. People are going to spend money on things that doesn't make sense. So when you see a dress selling for $900, you're like, who would spend $900 on a dress? Just understand, there's plenty of women that would gladly spend $900 on a dress. Don't think with such scarcity mentality. And just understand, a business like Revolve has every metric going up in the right direction. Their net income just over doubled up on a year-over-year basis. Their revenues are increasing. Even with this bad consumer, no one has money. Oh, really? Then how did Revolve just do $295 million of revenue last quarter? Last quarter, 3-month span. They're doing around $100 million of revenue per quarter. Seems like those dresses are selling just fine. So, understand, plenty of people will pay for it. Okay, plenty of people will pay for it. Just because you won't spend $900 on a dress doesn't mean somebody else won't. Just because you won't spend $300 on a dress or $5,000 on a handbag doesn't mean somebody else won't. Okay, got to understand that. It took me a while to understand that as well. And then as the years ticked on, I got older, my net worth increased. I began to understand, okay? And so keep that in mind. Next up here, Netflix. People are asking me, I even saw a lot of people on X asking me, like, what about Netflix? You think it's an opportunity? Let me give my opinion on this, okay? So big news came out here today in the past few hours that now Paramount outbids Netflix for the Warner Brothers Discovery deal, okay? And some sort of like hostile bid where Paramount wants to offer them over $100 billion. Netflix, I think, was willing to offer them $82 billion. It had been approved by the boards. Now Paramount's going in, wants to do a much bigger offer. It's going to be a situation. And so this could push up the price huge because now basically the shareholders could kind of revolt. Like it's going to be a messy situation now. Like really, really messy. Paramount is kind of screwing Netflix big time just by doing this. Like big time. Because Netflix already looked like it was kind of like a done deal. It might actually end up saving Netflix long term, in my opinion, but it throws a big wrench in this whole situation. It's messy, okay? So here are my thoughts in regards to this whole matter, okay? First up, I said this, I think, to my private stock group on Friday when I first heard about the deal. I said Netflix should have never tried this. It's horrible. I don't know what they're thinking at Netflix. This has got to be this might be the only time Netflix has made a move that I'm like, what are you thinking, guys? Like, this is dumb. This is straight up dumb. Because here's the deal. Netflix going to spend this fortune of money. Imagine how much sports content rights Netflix could buy. Speaking of sports content, that's like where the real money's at, right? Live sports. Netflix could spend so much money on sports content for $82 billion, right? Like, that's ridiculous. And continue to build their ad business up substantially, continue to basically force people to have Netflix if you want to watch live sports, right? It's substantial. Think about how many shows and, different products and movies they could create. It's incredible. And so Netflix should never try to buy this in general, in my opinion. Like it makes them into a messy conglomerate. Like Netflix is a very streamlined business model. It's very simple. You add Warner Brothers Discovery onto this, it complicates things. Now you have all these different properties, and it's like, how much do we spend over here on content versus this other property and HBO and blah, blah, blah. Messy. I don't like the deal in general for Netflix. I think it's bad that they even got into this in the first place, okay? No, next up here, this will be a huge hang up on Netflix for probably the next 6 to 18 months. Because now they're going to have to figure out, okay, is Paramount actually going to be able to get through and do some sort of revote here or something? And like Paramount will actually be able to buy them? How's that going to work since the board of directors of both sides have already agreed on this? So then the shareholders are going to kind of revolt. There could be lawsuits involved because if you're a shareholder and you're like, wait a minute, we could get $100 billion over there instead of $82 billion, and we get way more on our shares. Of course, you're going to want more money. So that adds a bunch of complexity in regards to the legal side. Now this is going to get even more to the forefront of regulators. And if, let's say, now Paramount is going to, if let's say Netflix is allowed, the board of directors and shareholders still vote, then it still has to get approved from the regulator side. Paramount could spend big money blocking the deal in regards to like lobbying different individuals, and it could get messy on the back end. Very, very messy. Very, very quickly here, which caused a whole bunch. And then Netflix doesn't know what they can spend money on, because now you're going to have a tie-up where you're like, we might spend $82 billion buying this company, right? And now it's like, if Netflix cancels the deal or if regulators don't approve it, I believe, I looked in the deal a little bit, I believe Netflix then has to come out of pocket several $billion. If, this is a big if the deal is blocked by regulators, or I think if Netflix voluntarily cancels a deal. I believe that's how it was structured. I'm not a lawyer, but I know a little something about law, and I believe that's how the deal is structured. So if that happens, like then Netflix has to pay billions, several $billion from what I remember it being. That's ugly. like this is no situation. This is a good deal in my opinion. And it's going to be a huge hang up for Netflix. Now can they bid on sports rights over the next 6 to 18 months? Not really. Like they don't know how much they can spend on buybacks. Shareholders are looking, and if you're a shareholder, you're thinking about buying Netflix stock. You're like, what am I buying here? Before it was easy. I'm buying Netflix. Now it's like, okay, I'm going to get all these different properties. Maybe not. Some people might want those properties and now be unsure if they're going to get those properties. Some people might not want those properties and be scared to buy it because they're like, I don't want those properties. So Netflix is going to have storm clouds around it for the next 6 to 18 months. What a mess. What a mess. So am I interested in stepping in Netflix? Absolutely not. In my personal opinion, there's just way better opportunities in the market. Like I can think of a long list of better opportunities. Once this situation's settled, let's say Netflix stock continues to go down all the way to Chinatown, and then this situation's solved, then maybe I step in on Netflix, but not here. It's way too messy. And I really question management's judgment. Like if I was a Netflix shareholder, I'd be seriously questioning management's judgment that they wanted to even do this deal, knowing how messy this could get. And knowing that it's going to mess up your company, in my opinion. Things are not going to be streamlined. You're going to have all these different components of your business. I don't like it. Netflix was simple before. Now they're going to try to complicate this thing. They're going to have to spend fortunes on lawyers. Oh my gosh. No bueno. So Netflix is a new touch. Alrighty, ladies and gentlemen. Remember, think long term. Think about the type of companies, management teams you want to be in for the next number of years, right? We're trying to build portfolios that we're proud of in the 2030s. Not that we're just proud of in 2026. We're trying to build portfolios we're proud of in the 2030s, right? Great companies, great management teams, proven business models, great financial statements at attractive valuations, all that good stuff. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community where we're constantly keeping in touch with each other, talking about what's going on in the market. How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Next up here. Okay, so you must understand, you probably heard this saying before, it takes money to make money. Okay, income versus expenses is very, very important, right? Your focus needs to be on income more than expenses. Expenses is a simple game. Live under your means. I don't care if you make $50,000 a year. I don't care if you make $100,000 a year, $200,000 a year, $200 million a year. You need to live under your means. It's just a simple way of spending, you got more at the end of the month, you got the more at the end of the week, you got the more at the end of 2 weeks than what you spent on all your expenses. And all your expenses is everything, right? That's taxes, that's your mortgage or rent, that's your car bill if you got one, that's going out to eat, groceries, health insurance, all that stuff, okay? That is very, very important. But income is where your actual focus needs to be heavily. I see way too many times people are focusing on this and like, oh, you know what, I'm going to give up date night with my girlfriend or my wife because, it costs money. And I'm like, dude, what are we doing here? Like, no. You can't just stop living life. Just, focus more on this. Because I'm like, there's so many talented people out there that could, if they focus way more on this, they wouldn't have to stress about this as much. That's very, very important to understand. I'll put it to you like this, okay? I said, what's the difference? Let's say you could invest $5,000 a year, right? And you got a 15% CAGR on that money over 30 years. Versus, let's say you were able to invest $100,000 a year for the same amount of time, the same percentage of CAGR. Do you know what the dollar difference is in what you would have after 30 years? It's $41 million. $41 million. This is why, trying to focus, put all your attention on like, am I going to save 20 cents at the grocery store buying this bread versus this bread? It's not the most valuable thing your brain could be spending on. You got to understand, your brain can do unbelievable things. Unbelievable things. You're actually very, very intelligent. It's incredible. If you focus that attention and time on making money activities, oh my gosh, you'd be so much better off. And I know so many people that are focused on the coupons and like, I'm never going to spend at Starbucks because of this. And I'm like, oh my gosh, if these people just understood, like they have so much more income potential than they know what to do with. And if they focus more attention on that rather than the expense side, like I used to live that life a long time ago of like focused on the expenses more than the income. And it's brutal. It's brutal. And it's a scarcity mentality type way of thinking, right? Focus more on the income. That's when we're really going to be talking about running the numbers up. There's so much of a difference. If we could have ran this number of, $5,000 versus $10,000 and you'd still be shocked at the difference in, what you could have there. So getting your income up, it's way less stressful, way more fun, and it's very, very possible, okay? Now, next up here, work with urgency, do not get sloppy. I thought this was a perfect picture to kind of illustrate this, all these things kind of next to each other here. Okay, let me explain this. This picture was done for me in middle school. My art teacher in middle school basically drew this picture in 2.5 minutes, way back in 2003. That's how I used to dress back in the day. I'd have my hair up like a crown. I'd have a little fake silver necklace on, t-shirt, cargo pants, pair of shoes with no look socks. That was my vibe back then, right? And might still be my vibe today. I don't know. But the moral of the story is here. She drew that picture in 2.5 minutes. At 1.5 minutes, 90 seconds in, I remember looking at that and being like, this is not going to be anything like me. And then all of a sudden, after about 2 minutes and 10 seconds, it was like, oh my gosh, what the heck? How is she doing this? Like, it's starting to actually look like me. And by the time she was done, 2.5 minutes, she drew a picture that I'm like, dude, that's me. Like, how did she do that? You got to work with urgency, but you don't want to get sloppy. And so I thought it was perfect because the roulette wheel's right here, right? And too many times people start getting impatient. They start getting sloppy. They start gambling their money around because they want to get to the next rung, whether that rung is 100,000 to 200,000, 200,000 to $500,000, right? $500,000 to $1 million, $1 million to $2 million, right? $2 million to $5 million. They get a little impatient and they start getting sloppy. And next thing you know, they go backwards. And the big thing you want to avoid is going too far backwards in this game. You go too far backwards, it sets you way behind the ball, and then it makes it that much harder to climb to, if we're talking $10 million plus. So work with urgency, but do not get sloppy. That's so vital, okay? Next up here, listen. Mistakes. If you're playing big money games, you're trying to climb the ranks, you're gonna make mistakes. It's a guarantee. You're going to make mistakes. It's the cost of doing business. It's no biggie. Don't stress about it. If you make mistakes constantly, we got a problem. But if you make mistakes from time to time, you buy a bad real estate investment property, you buy a bad stock, you lose money in it, you sell too early, whatever, cost of doing business, I don't even stress over it. I've never stressed over it because I understand it's the cost of doing business. No one in the business game, investing game, has gotten through this game without mistakes. You could go down the billionaire list. Go ask Elon Musk about all the mistakes he's made over the years. Go ask Jeff Bezos about all the mistakes he's made at Amazon over the years, right? Go ask Warren Buffett about all the bad stocks he bought over the years, right? And it's perfectly fine. Just understand none of these people are perfect. They've all made tons of mistakes. They could probably spend a full lunch with you or a full dinner with you just running through. Like you could have a whole 7-course meal and they could explain to you all the different mistakes they made over the years and how it cost them money or cost them opportunity and this and that. It's the cost of doing business. People sometimes get embarrassed by this. Oh my gosh, if I buy a bad stock, oh. You know, I've been on YouTube since 2016. I bought some bad stocks. Some didn't work out, right? Some worked out way better than I ever thought. And most did work out. But some didn't work out. Am I ashamed? Am I embarrassed? Absolutely not. It's the cost of doing business. You're like, oh my gosh, you picked that bad stock. Remember that one? How could you not be embarrassed of that? It's the cost of doing business. Did you forget the other 10 that did work out? Did you forget that one I made life-changing money on, and that one I made life-changing money on, that one I made life-changing money on, that one I made life-changing money on, right? And so cost of doing business, you're going to make mistakes. It's fine. Get up, dust your shoulders off, and let's go, baby. We don't have time to dwell on the past. It is what it is. It is what it is. If that's just why I think everybody should play sports. If everybody played sports and tried to do it on a high level, they would understand the game of mistakes. When I played tackle football for 5 years, guess how many mistakes I made? Either on plays or in practice? 1 billion. Are you kidding me? I made so many mistakes. Cost of doing business. Cost of doing business. It's just what it is. And that's what life's also about. A big component of what life is about. It's about making those mistakes and dusting your shoulders off, picking yourself back up. Understand you made a mistake. Putting that in the back of your head. It's way back there somewhere, right? Oh yeah, I remember that happened. Moving on and making sure you don't keep making the same mistake again and again and again, right? It's life, man. That's life. And so cost of doing business, no biggie. Don't stress about it. Don't freak out about it. It is what it is, okay? If you're in this game for a long time, you're going to make mistakes. This is no other way of playing. Imagine you're investing for 40 years in the stock market. You know how many stocks you're going to pick that probably didn't work out or way underperformed, or you should have put money in this other stock instead of this stock? This is fine. It's a cost of doing business. It's a cost of doing business. Next up here, okay? When you're choosing people to work with, choose top quality. Pay up, okay? By the way, if you want to follow me on X, I have an X page. You can always look in the description area. I do have that down there if you want to follow me on there. Pay up for top quality people, okay? So, for instance, if I'm looking for, let's say I'm looking for somebody to do my taxes. I want somebody that has maybe worked for the IRS before. Maybe they have a lot of respect at the IRS. Maybe they have a lot of connections. I want somebody that's top quality. I want somebody that has a lot of respect. Right? If I'm looking for a lawyer, right? Depends on what I'm looking for. Let's say I'm looking for something securities related, right? I might go for a top quality lawyer that maybe used to work for the SEC. or work for other big regulators and has connections to everybody, right? Like, I'm going to think in those sorts of terms. I want top quality. I want somebody that knows inside and out everything, right? Like, that's that. When we're talking about top quality, if I'm thinking about, like, I want to hire developers to work on a project for me, right? For something website related or software or something, right? I'm going to be looking for people that have great experience, have done great things over time, and have proven themselves, right? I've gone the route of trying to go the cheap way out, trying to bet on people that weren't proven. It doesn't go well, ladies and gentlemen. It doesn't go well. I did that several times on my climb. We talked about mistakes. I made plenty of mistakes over the past 17 years. And one of them was trying to think about, like, I'm going to bet on somebody that hasn't proven themselves. Oof. It usually ends bad. It usually ends bad. Pay up, pay the big bucks for people that are top quality. And oh my gosh, it's going to be the best investments you ever make, man. Pay up for top quality, way better than trying to go cheap. No. Next up here, you must understand you've got to stay in abundance mentality. There's scarcity mentality and there's abundance mentality. And this is actually on a spectrum, okay? So think of it like this. You've got scarcity mentality over here. You have abundance mentality over here, okay? Some people are so far in abundance mentality, almost gets unhealthy because they just are such like risk takers because they just think everything's going to the moon, and like you don't want to be quite all the way to this extreme. On the flip side, you got scarcity mentality. Some people are so scarcity mentality they can't spend any money doing anything. They're like, are always going to live in poverty. They're never going to be able to spend anything. And like, from the time they're an adult to the time they pass away, like they can't ever do anything, right? You don't want to be there. That's a brutal place to live, right? But it's a whole spectrum. So you have people that are closer to abundance. You have people that are closer to scarcity. You want to be closer to this side over here, the abundance side, okay? That is where it's at. You've got to have a positive outlook on life. Extremely important. You got to understand there's no limit to the amount of money in this world. There never will. The amount of wealth in the world is constantly climbing. The amount of dollars, euros, everything in this world is constantly climbing. The amount of debt in this world is always climbing. The amount of net worth in this world is always climbing. It's always going up, right? The best companies in the world, where their revenues go despite whatever's going on in the world, up, 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 up. Have abundance. There's abundance in this world. There's no shortage of money. There's absolutely no shortage of money. The more you get around money, the more you start to realize, oh yeah, like there's no shortage of money. Like there's so many people out here with so much money that I could sell products and services to, that I could do this, that I could do that. There's no shortage of money, right? And I think that's why a lot of the richest cities stay the richest cities, and so many people have incredible success in those cities because they're around that sort of abundance. If let's say you're in Silicon Valley, I just think it's a lot easier to be successful in tech and maybe become a millionaire, multimillionaire, billionaire, somewhere like that, because guess what? You're around so much abundance. There's so many people doing it on a high level that just raised money for their company at $150 million valuation. You're like, oh, dang, like that was nothing 18 months ago, and now they're at $150 million valuation, right? You think differently. You start growing that abundance mentality. If you're in poverty, right? Let's say you're in a small town. It's a very poverty-ridden area, and no one has money that you never go to areas that you see abundance, you see, just nothing but scarcity. Oof, like that's not a good place to be. I'm sure if I stayed in the hood where I grew up in my early years before we moved to a middle class area when I was, getting ready to go into middle school, I'm sure I would have probably had scarcity mentality forever. There's a good probability of that, right? And it's natural. It's very, very natural. But since we then climbed out, my dad had his pool business. I would help him all summer, every summer when I get out of school, right? Since I was a little kid, all the way throughout the years. We moved to the middle class. I got to see we stepped up a level. All of a sudden now people can afford to buy a new Tahoe, right? All of a sudden people can afford an Escalade. Like that still wasn't like, oh, people are driving Lamborghinis and Rolls Royces and stuff like that. But it was like, that guy just bought a new F-150. Like, oh, that person just put $10,000 into fixing up their front yard. Oh, that person just spent $50,000 putting a pool in their backyard. You start to like, okay, like we're growing. You start to go into that more abundance mentality, right? And then as you see more success, it's easier and easier to get over there. And just, you just got to keep climbing and keep taking your mentality to a place where you're in that abundance and then stay in that abundance.